You're watching the Dinar Chronicle, your #1 source for breaking developments in global currency revaluations. If you're holding Vietnamese Dong, you need to listen very carefully to what we're about to report. Appears to be one of the most significant developments in the Vietnamese Dong revaluation story. Bank of America has reportedly begun accepting VND notes at a rate of $3.99 per note. Yes, that is correct, $3.99. This breaking revelation, as reported from multiple sources close to privateer-level exchanges and internal bank documents, has sent a ripple effect through the global revaluation community. Our newsroom has been monitoring this situation closely since the early hours of the morning. When the first alerts began circulating among high-net-worth currency holders and banking insiders, what makes this update so impactful is not just the new valuation rate, but the fact that Bank of America Tier 1 global financial institution has reportedly activated this rate in live processing exchanges for qualified note holders. Early indications suggest these exchanges are being handled under NDA protocols and highly secure appointment windows, with transaction verifications requiring not only authenticated currency, but also pre-approved clearance through internal BOFA systems. This new rate of $3.99 per Vietnamese Dong comes at a time when global speculation around Asian currency shifts has been intensifying. The Vietnamese Dong has long been viewed as a dark horse in the global revaluation movement, often shadowed by the Iraqi dinar. But in the last 72 hours, attention has turned sharply towards Southeast Asia. Analysts have noted unusual fluctuations in interbank trading rates for VND across Tokyo, London, and New York desks. These fluctuations were initially brushed off as short-term volatility, but when Bank of America began executing exchanges at a fixed $3.99 rate earlier today, the speculation turned into something far more real. Bank of America's internal systems reportedly began reflecting this revaluation rate in secure back-office terminals overnight, with IT and compliance departments running parallel validations to ensure regulatory standards were being met. While there has been no formal press release from BOFA as of this broadcast, private banking clients and executive account holders have confirmed under confidentiality that appointments were offered through coded invitations, issued via encrypted channels connected to BOFA's high-yield investment platforms. Our sources say that the exchange process involves scanning and verification of physical VND notes, authentication using anti-counterfeit UV standards, and tiered payouts scheduled over a 72-hour settlement period. Individuals participating in these exchanges are said to be operating under strict digital silence clauses, with electronic devices sealed during in-person appointments and funds routed through restricted custodial holding accounts pending IRA clearance. This movement appears to be part of a larger orchestrated shift that has been quietly building momentum behind the scenes. Several retired financial analysts and former IMF consultants we've spoken to say this isn't a random one-off situation. They believe BOFA's actions are part of a soft rollout designed to test system integrity before broader public activation. One analyst, formerly affiliated with the Federal Reserve's Currency Control Division, called this development the beginning of a strategic liquidity redistribution operation the coming weeks. Interestingly, just last week, Bank of America was observed making several discrete adjustments to its international currency reserves, with internal memos discussing the need for revaluation-ready capital buffers and alternative asset class contingencies. The timing of those adjustments now appears directly linked to this VND movement. Additionally, the bank had reportedly moved several high-ranking foreign currency traders to its Charlotte, North Carolina headquarters just days before the new rate went live. One major question on everyone's mind is whether this rate is temporary or indicative of a full public rollout. Early feedback from insiders points to this being part of a staggered rollout process. According to one confidential source who has worked within BOFA's global banking division, the $3.99 rate was established as a pilot valuation following private negotiations between U.S. Treasury intermediaries and foreign monetary stakeholders operating through Vietnam's central banking infrastructure. The same source emphasized that this is not yet a market-wide exchange rate. As of this moment, you will not find this rate reflected on Forex platforms or at standard retail banking counters. This is a controlled, appointment-only exchange process occurring within internal infrastructure under specific regulatory clearance. However, the previous trading range of the Vietnamese Dong has hovered in the neighborhood of 23,000 VN per US dollar, making this revaluation one of the most dramatic in modern currency history. If it holds at $3.99 per note, holders of even modest stacks of Vietnamese Dong could be looking at life-changing payouts. The impact this could have on liquidity cycles, real estate markets, and private equity ecosystems is staggering. We also want to highlight some signals that further corroborate this breaking report. BOFA systems have quietly flagged VND as a watch-level currency within their internal AML anti-money laundering monitoring dashboards is undergoing critical scrutiny due to potential price adjustments, geopolitical relevance, or systemic banking shifts. In tandem with this, SWIFT activity linked to Vietnamese origin banks has risen 17% in the last 24 hours, according to real-time banking telemetry shared by an insider analyst group out of Zurich. It is also worth mentioning that the Bank for International Settlements has scheduled a closed-door meeting with central bank delegates this week, and VND is rumored to be a high-priority agenda item. While BIS rarely comments on individual currency strategies, the timing of this emergency meeting and the volume of VND-related communications intercepted in the financial space cannot be ignored. What happens next will depend on several factors. One, whether other banks, such as Wells Fargo, Chase, or Citibank, follow BOFA's lead and begin activating their internal VND exchange systems. Two, whether the U.S. Treasury issues a public clarification or confirmation about the legitimacy of this rate, which would move the development from controlled rollout to regulatory recognition. And three, holders of Vietnamese Dong are being advised not to rush into unverified exchange processes. Scams and fraudulent actors are likely to emerge as news of this rate spreads. As always, make sure that any exchange you participate in is conducted through a legitimate institution with documented credentials. Do not respond to unsolicited offers or invitations. That being said, this development from Bank of America, confirmed in full, is the most significant step toward a public Vietnamese Dong revaluation we've seen in over a decade. The $3.99 rate would place Vietnam's currency in an entirely new class, dramatically altering not only regional trade balances, but global currency market dynamics. From a geopolitical standpoint, this revaluation could signal Vietnam's accelerated integration into a new tier of international financial systems. There are already quiet whispers that this may have been orchestrated in cooperation with BRICS-aligned financial reform strategies, although this has not been officially substantiated. On the ground, Vietnamese American community leaders are reporting a surge in inquiries and community-based financial consultations as word of this development spreads. Some financial planners and CPA firms catering to currency holders have already begun fielding calls regarding wealth management strategies, tax implications, and potential reinvestment avenues. It is clear that the emotional and financial stakes tied to this moment are extraordinarily high. We also want to note that this development may influence behavior in adjacent currency markets. Already, there has been a subtle uptick in activity related to the Iraqi dinar and Zimbabwe dollar among niche currency investor groups. Historically, major reevaluations have triggered a domino effect of speculation and hedging. This is why we are watching to see whether this VND movement triggers broader financial repositioning in the weeks ahead. The revaluation of the Vietnamese Dong at this rate, if extended beyond initial BOFA appointments, would have long-term consequences on Vietnam's trade surplus, foreign debt management, and tourism economy. Experts are also questioning how Vietnam's government might leverage this sudden capital inflow. Will it reinvest in national infrastructure, debt relief, or technological innovation? These are important questions that go beyond individual gains and touch upon national economic trajectory. Please remember, as with all major currency developments, this report is based on real-time insights, confidential sources, and emerging banking activity. However, until there is official confirmation from Bank of America or U.S. Treasury departments, this news must be classified as speculative and subject to change. We urge all viewers to conduct their own due diligence and consult with licensed financial advisors before making any decisions.